Welcome back. Before we take a look at the day's business news, let's take a look at the stock indices across the GCC. And in our top business story, the International Monetary Fund, Institute of International Finance, global credit rating agencies and a number of independent research organizations have revised upwards the growth forecast of the UAE this year, reflecting the improved fundamental strength of the economy. While the IMF has forecast a GDP growth of 4% in 2013, the IIF sees the country's economic growth exceeding 4.7% this year. According to local reports, the Deputy Director at the IIF for Africa and the Middle East stated that all leading economic indicators such as oil prices, Purchasing Managers' Index and growth indicators in the private sector point to a strong underlying growth. The latest real GDP estimates for the Emirate of Abu Dhabi suggest that overall UAE growth may be revised upwards, as the Statistics Centre Abu Dhabi reported real GDP growth for the Emirate at 5.6% in 2012. With Dubai's real growth last year at 4.4%, this suggests overall UAE growth of just over 5% in 2012. Additionally, in its latest report on the UAE, the IMF estimates a budget surplus of more than 120 billion dirhams, 8.6% of GDP in 2012, compared with the previous forecast of 67.7 billion dirhams, which was 5.2% of GDP. The IMF estimates a surplus of 111.5 billion dirhams, which is 7.9% of GDP for 2013. Moody's recently affirmed the country's foreign and local currency government issuer ratings at AA2 with a stable outlook. The UAE's credit rating is among the highest in the GCC, along with those of Kuwait and Qatar. According to economists, the overall outlook for the UAE is positive, as the economy has made a steady and strong recovery after the challenges it faced a couple of years ago. Hotel room rates in Dubai and Abu Dhabi are set to rise further next year, despite the addition of thousands of new rooms, as soaring visitor numbers bolster demand. Some 109 new hotel rooms are in the development pipeline across the Emirates that would add 31,000 rooms to the total stock, according to the latest STR Global data available. Through November, almost half of the new hotels are planned for Dubai, accounting for more than 16,600 rooms. Abu Dhabi is expected to attract 27 openings with more than 7,000 rooms. In Abu Dhabi, the revenue per available room rose 10.4% to $171.70 last month, compared with the same period last year, according to STR Global. While this month's rates are not yet available, the rates at the end of the year in Abu Dhabi have gone down for the past couple of years. Last year, room rates for December were $130.60, a fall from $153.20, according to the Dubai-based Hotstats MENA, as more hotels were completed. In Dubai, room rates rose 9.9% to $290.68 in November, with the revenue per available room going up by 12.7% to $254, according to STR Global. Last year, the December rates were $322.90, up from $308.40. On average, the room rates in Dubai last year hovered around $272, up from $205.50 in the previous year, with the occupancy of about 80%. Pearl trade across the UAE has grown at an average of 15% in the last 4 years. As such, experts in the industry are calling for increased government support for the pearl business. Mohammed Al-Suwaidi, operations manager of RAK Pearls, was quoted in a local report as saying that the opportunities for UAE pearl businesses in the international pearl market is quite high and will explore potential opportunities across the pearl industry value chain, adding that a body must be established to look after the pearl industry's development across the Emirates. In 2011, UAE's exports of pearls amounted to about 68.19 million dirhams, while key re-export markets for pearls were Hong Kong, Switzerland and the USA, according to latest figures from Dubai Chamber of Commerce and Industry. Al-Suwaidi said that the historic background of pearl trade across the UAE and the business climate should enable the Emirates to invest in pearl business and lead the industry in the region. RAK Pearls is the only company that has a pearl farm in the UAE and Middle East. It produces cultured pearls with a production capacity of 200,000 pearls per year. Dubai's exports and re-exports of pearls have increased about 15.10% between 2008 to 2011, with the pearl identified recently by Dubai Exports among a number of product categories that can help boost the Emirates' exports and industrial sector. Dubai developer Nakheel has announced it has closed land sales worth more than 162 million dirhams in its Al Furjan and Jumeirah Village Triangle developments. According to a company statement, in Al Furjan, it has sold plots of land for 70 million dirhams for 91 townhouses, in addition to 4 commercial plots for 26 million dirhams. Al Furjan already has more than 800 homes, and a new community retail and recreation centre is due to open early next year. Nakheel added that it has also sold 45 villa plots in Jumeirah Village Triangle, located close to its 860-hectare master development south of Al Khail Road. According to a spokesperson for Nakheel, the sales are evidence of heightened investor confidence in the Dubai real estate market. In October, Nakheel said its 9-month net profit jumped 58% year-on-year as the company continued to benefit from the recovery in the Emirates property market.